We saw the main market selling down hard in the past trading session, with financials suffering the worst financial performance. The hopes of a Chinese economic rebound are faltering, as the SP500 sinks to 7-week low. At the center of the banking problem is Silicon Valley Bank and Silvergate. What's in the crosshairs right now are capitalization fears. Silicon Valley Bank announced a $1.75 billion share sale late on Wednesday, and that raise has got a lot of people very nervous about other banks' capital levels and what their deposits are doing. People are concerned that this could be the starting point of financial banking contagion. The S&P 500 Banks Group was down 6.57% on the day. Silicon Valley Bank Financial Group suffered a massive 60.41% one-day fall. Silvergate Capital Corporation followed with a massive 42.16% fall. Silvergate Capital Corporation is the holding company for Silvergate Bank. Signature Bank also came down, but a quite modest 12.18% fall in comparison. In other banking news, Credit Suisse regulatory compliance head is leaving as a part of a wider overhaul. Credit Suisse recently postponed the publication of their annual report, not a good sign. Credit Suisse is cutting 9,000 jobs and is seeking to restore profitability after a series of scandals and losses that have drawn regulatory scrutiny and undermined investors' confidence. Credit Suisse is Switzerland's second largest bank. We hear that managing your own money through having crypto is very, very risky. Only the banks can keep you safe because they're always above board. Ex-Goldman banker sentenced to 10 years prison in the 1MDB corruption case. A lot of people say that the banking industry is very safe. Wherever people exist, the chance for manipulation and fraud and downright criminal activity also exists. For example, in June 2013, HSBC is one of several banks investigated over suspected FX manipulation. And of course, listed companies, they don't commit fraud or anything like that. Well, yes, they do. Even though the government keeps on trying to pass legislation, it can't stamp out corruption. Why can't it? It's part of the human condition. Following the GFC or global financial crisis, there were a lot of fines handed out by regulators. On July the 15th, 2010, Goldman Sachs paid $550 million fine to the SEC over a misleading debt offering. On November 19th, 2013, JP Morgan paid $13 billion in settlements over residential mortgage-backed securities. On August the 21st, 2014, Bank of America pays a record $16.6 billion to settle with US authorities over residential mortgage-backed securities sales. All of this led up to the GFC. The technology industry had a solution to avoid banks to get around them. It's called crypto. Coming out of the GFC, Bitcoin was invented. Bitcoin has been so widely adopted that Ukraine's central bank sees both promises and threats in Bitcoin. Bitcoin and crypto are so powerful they can replace the banking system as we know it. What do the governments seek to do about this? They seek to create or compete directly with crypto by creating central bank digital currencies. The problem with CBDCs, the government will know how you spend every single dollar, every single euro, every single pound. It creates unprecedented power to surveil and control your financial activity. This is especially the case in China, where if anybody doesn't agree with the CCP, their money is cut off. That could be just a taste of things to come with CBDCs. But of course, the government says they're safe. Because that's true, they're safe for governments. You can see that some very forward-thinking and very intelligent people tried to sidestep the banking problem. In this special episode, we're going to look at the structure of financial markets. We're going to delve deeply into if the markets are due to sell down. We're going to assess if there's any support below. As always, as professionals, we go independent from the news headlines because, after all, news headlines just reflect the previous days, either price increases or price decreases. And one thing that we did see, the VIX spiked nearly 20% in the past trading session. Stay tuned, it's going to be a great video. Hi everyone, I'm Ken from CryptoTradingKS. My goal is to help you to succeed and become more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process, based on my more than 30 years of experience in financial markets. If you're new, a very warm welcome and welcome back, KS family. What we see here in the past trading session, and Masterclass students, you get this live chart in TM6. We had a very large spike in the VIX. Also, junk bonds and high-yield corporate bonds both lost their support levels. This means that risk is coming out of the market. These two things would suggest that we need to be very cautious at the current time. We can also see that bond prices remained in an upward movement and yields actually sold down as the dollar sold down and gold staged a little bit of a bounce. There are very specific reasons as to why this happened, and we'll look through those shortly. We can see the Nasdaq 100 is literally hanging on by a thread. Because of recessionary fears and less economic activity coming out of China, oil is making its way down again. President Biden has unveiled a $6.9 trillion budget. And that is a 25 minimum tax on billionaires. Capital gains rate increases from 39.6% from 20%, and higher income levies for corporations and the wealthy. President Biden wants to hike the corporate tax rate from 21% to 28%. In other news, US mortgage rates hit the highest since November at 6.73%. One thing that we do see, which is a notable outcome in the past 24 hours, yesterday the probability of a 50 basis point increase in the federal funds rate in about 2 weeks when the FOMC meets was 78.6%. Just in 24 hours it's dropped to 63.1%. The Fed is quite happy with unemployment claims reaching very high levels, much higher than expected. What is potential banking contagion possibly doing to the markets? We can see that the 5-year forward expectation inflation rate has come down, as well as the 5-year and the 10-year break-even inflation rate. That's actually good for markets. If you were not applying the CTKS method and didn't know how to mark up your charts from all of price history, you would look at the SP 500 like this and say, oh no, it's all over. Why would you say that? Because based on recent price history or recent indicative price, which we call RIP, because it's the best way to just destroy your funds, you would look at this and say, oh no, we're under this resistance, therefore we're on the way down. What if instead you had X-ray vision on the markets and can see where markets could potentially fall to, where smart money would step in, where the algorithms would kick in and actually start buying that falling knife that you're not supposed to touch? The only way to see where the algorithms are actually operating is with the CTKS method. And one thing that we know, the S&P 500 is currently trading at 39.18. If it falls below 38,880, just buckle up. There's a fresh air gap there and things could get really, really choppy. One thing that I've been speaking about, this 3880 mark is a very, very strong support level. There's so much support in and around the current price that it will be really difficult for sellers to get through there. It doesn't mean it's impossible, but it does mean it will be difficult. Very difficult. It's amazingly important to look at the DXY. If the DXY spikes, it places financial pressure on everything. Every single market will be impacted, and not in a good way. The spike in the dollar is currently negatively correlated to downward price momentum in markets, and we know no market can escape the US's gravity, so beware. No matter what country you're in, you must look at the DXY. That's if you want to make money and you want to keep your money. When we're looking at the DXY through normal eyes, we could say something like this: oh, look at this, there's support here. And that's what people are going to be saying. And they're going to say, oh, there's support down here as well. So we're just at a support level and the dollar is going to get over resistance. That's a very, very short-sighted way of looking at any financial instrument. You really need to know where the algorithms are playing. How do we do this? We mark up our charts with the CTKS method. What we saw, and I mentioned this in yesterday's video, this particular smart money sell level was very, very strong, and we've seen the DXY back off from that. It's coming up to a short-term support around the 105.071, but that's got nothing to do with this price action just on the 2nd of March. It's like saying the DXY has been trading for a week and that's all the history that we have. We can't do things like that. We need to look into all of price history, not just current price history. I'm sure it makes sense. The DXY is currently 105.278. When you look at the technical components of the DXY, you can see very clearly we're under a level of resistance. And when the DXY, even if it was price moving in a wave, was to come back and challenge this very, very short-term resistance around the 105.563 mark, it's got this incredible weight of selling resistance above it. Just be aware of that. When we combine these two factors, the DXY and the massive support under the SP 500, we're starting to paint a picture. This is what we call stacking probabilities. Thank you very much to the people who reached out to me and shared what they would like me to mark up. You can just go to this form and do your recommendations. I'm here to help you. If I don't know what you're looking for, it's very hard to provide the answers for that. Please let me know. Just use this form. As the DXY exploded, the euro versus the USD imploded. But it imploded back to a smart money buy level around the 105.299 mark. If you didn't have the CTKS method, you would not know where the euro was going and where it could potentially find support, where the smart money would come in and actually change the trend. And that's exactly what we've seen occur. Just as the DXY has a lot of overhead resistance, we can see that the euro has under support. There's a lot of support underneath the euro, and there's a fresh air gap, which could mean that the euro could just explode upwards from its current 105.820 up to the 106.314 level with not too much effort. This is something good to bear in mind. This is another way that we stack probabilities. As the DXY exploded, gold imploded. But we know there's actually a ton of smart money buy levels just in here, just in this range, between 1809 and 1830. And we can see the smart money has been leaning in. The algorithms have been actioning buy orders. The CTKS method actually draws up lines on gold since 1883. When I say that there is strong market structure around these current levels, that is absolutely the case. And this is very important to understand. If you're not looking without the CTKS method, if you're saying, okay, here's gold, oh no, it's going down and down and down, it's just going to go to zero. You want more certainty than that. You want to understand where the safety nets are inside the market's action. Always do your three-dimensional thinking. Think if the price goes against you, goes nowhere, or goes in your favor last. Remember that you control the trade or investment, but it's the market that controls the returns. And markets can be very, very turbulent. When we look at the 9 sell-offs and recoveries in the SP 500 since 1966, we can see we've not broken support just yet. And we know technically there's a lot of smart money buy levels under the SP 500 right now. And that really, really matters. If you were investing or trading in Tesla, you could see this market action and say, oh no, Tesla's going towards zero. But is it? To know where the safety nets are, you need to mark up your charts with the CTKS method. You can see by doing so, we're coming into a smart money buy area and there's one below it. If we break down under that 171 level, we would anticipate dropping further, but we're starting to get smart money buy levels accumulating. Remember that I always talk about fresh air gaps. When you've got a fresh air gap or a wide range between smart money levels, what typically happens is that financial instrument can come down very, very quickly. As we can see here on Tesla, and we go and prove these things every single day, 7 days a week, on any financial instrument. As smart money, you know that there's a lot of support from this 38.80 mark all the way up to 39.38. Even if the price is slightly below that, that doesn't mean that this upward area has turned to resistance. There's a magnetization, just like if you had a trampoline below you and you jumped off a story onto the trampoline. Yes, it will go down, but it will ping you up as well. If we fall below 38.80 on the SP 500, beware below. When we look at the technical structure, we can move past these very controversial headlines that actually invert by the day. We know that there's a lot of support under the SP 500 because we've marked it up with the CTKS method. We understand what smart money will do, what the algorithms will do. There are a lot of data points to keep in mind. I suggest you mark up your charts with the CTKS method. We've gone through the first essential parts, our foundation part, stacking probabilities, looking beyond the crypto market. It's time to look into the crypto market. We know that no alt can escape Bitcoin's gravity, and Bitcoin cannot escape the stock market's gravity either. And that's exactly what we see playing out in the crypto market. This is why it's so important to know where the SP 500 support actually is. Crypto cannot be stopped. It's already a global phenomenon. Therefore, the House Republicans directly criticized the president's administration for digital asset policies. And they say, because of the actions taken by this administration, the United States is at risk of pushing the digital asset economy ecosystem overseas. Losing that technological edge would be disastrous. When we think of the US, we think of Silicon Valley, the heartland of innovation. And what's being innovated on? Well, it's technology, and especially the internet. By pushing the digital asset ecosystem overseas, what's actually happening is the Silicon Valley of the future could be very well in the Middle East. There's a lot of rampant misinformation out there on what crypto actually is. Crypto is the next generation of the internet. It's Web 3.0, or the internet of money, or the internet of value. But if you ask the average person in the street, they'll say, oh, that's where criminals go, because they do all their transactions on an immutable public blockchain, which identifies exactly who they are and exactly where they're transferring the money. Very dumb criminals. Governments play a lot of games when it comes to raising money, and the US is in dire need of raising funds, as you can see with President Biden's bills supposedly coming out if they pass, and they probably won't. US Repo Task Force names crypto as a target in efforts involving $58 billion in sanctioned assets. But meanwhile, just under a different cup, the ball under a different cup, SWIFT moves to the next phase of central bank digital currency testing after positive results. So the government really loves digital money, except if it's owned by you. It must be owned by them. And how about this? As a statistic, 24% of central banks will introduce their own central bank digital currency within the next couple of years. All these CBDCs are built on blockchain technology. That's what Bitcoin created and leverages. Meanwhile, in the world, H&R Block to integrate with CoinTracker to offer crypto tax preparation. And there's discussions as part of Biden's bill that they don't want to allow you to actually recover tax loss harvesting in the US. For a couple of days now, I've been talking about this fresh air gap, and the problem with fresh air gaps, when you are actually not in a supported market structure with a lot of support below you, that creates a fresh air gap like what we've seen here. That means that the price can dramatically and often traumatically move down very, very quickly. And this is why previously I released to the public on buymeacoffee.com/CryptoTradingKS that 10-5-10 rule video. If you go across to buymeacoffee.com/CryptoTradingKS, just click on the post button. And what you can do is just scroll down. There's so many videos here, just all the way down to the first one. The 10-5-10 rule, understanding your crypto. This is rule 18, and it's a really important one for you to be aware of. I'd like to also thank the very kind and generous community members who have bought me a coffee on buymeacoffee.com. Thank you very much to Vicente. Vicente said, "Thank you, Ken and Kate, for your daily and tireless effort. The amount of knowledge you provide us with on a daily basis is brutal and basic to be in sync with the market. Greetings to the whole community." Thank you, my friend. Mangi said, "Hi Ken and Kate, thank you so much for your time, kindness, and for being one of the most valuable sources of knowledge I have ever experienced in my many years as a lifelong learning lover and believer. Your videos and of course the masterclass are just first class and at the top of the tops for me. I really appreciate you and all what you do for us." Thank you, Mangi. That's so very, very beautiful. And to LGRC1, thank you, my friend. Thank you, everybody, for your kind generosity. It's really heart-touching. When we look into the crypto market, we can see that the number of shorts, the number of Bitcoin shorts, are actually pumping up in a big way. Why is this? Because the shorts are taking a pulse on the economic condition, but they may not know there's so much support under the SP 500. Those shorts could get absolutely and utterly whacked if a technical bounce does occur. Could those particular levels on the SP 500 get broken? Yes, of course they could, but it's unlikely. Looking back to Bitcoin, we can see that Bitcoin, currently trading at 20,343, has just passed through this safety net and has pinged from a lower safety net around the $20,060 mark. What happens next? If people don't mark up their charts with the CTKS method, what typically happens is that they track moving averages. This is the 50-day moving average. This is the 200-day moving average. You'll get a lot of people talking about that Bitcoin's price is being reflected by the 50-day moving average and coming closer to the 200-day moving average. What you'll actually find when you're inside markets for decade after decade after decade, these moving averages mean very, very little. What actually means the most is where smart money will come and buy, where the safety nets are in the market, and unfortunately moving averages only reflect past price history. What you need instead is objective dynamic market structure, or ODMS, and that is only available through the CTKS method. Very shortly, we're coming up to some economic releases, the US unemployment rate and non-farm payroll, and of course the Mt. Gox unlock. Also later on, we're actually coming up to inflation, the US CPI data, and then later retail sales month on month and the PPI month on month. Following that is the next FOMC meeting. I mentioned a while ago that this could be very turbulent, and that's exactly what we're getting. Just keep in mind the support levels on the SP 500. Don't forget also that the markets have a history of rallying into the next FOMC meeting. Just keep this on your radar. Keep very, very flexible. Across the past 24 hours, there's been a lot of liquidations, 273.68 million across 85,556 positions. This is not that great number of positions. When you get a full-on market meltdown, you can expect over 300,000 positions to get liquidated and moving into the billions as well. We're not there yet in terms of negative price momentum. That doesn't mean we're going to get there either, but I just wanted to put that on your radar. When we look at total liquidations across the past 24 hours, 91% long. What about the past 12 hours? 92% long. What about the past 4 hours? Still 92% long, but a little bit more. What about the past hour? Ooh, gone the other way, 64% short. That means that we're getting a little bit of a bounce, a little bit of a technical bounce. And you can see that because you know that there's a smart money buy level that the market reacted to and it bounced from there. We know Rule 45, no alt can escape Bitcoin's gravity. We can see as Bitcoin sold down because of potential banking contagion within the economic structure. What did ETH do? It sold down. What did BNB do? Remember, it was inverting in yesterday's video, and I said just be a little bit careful, and I showed you IMX to actually hammer that point home. Inverters become aligners. So something to really bear in mind. And when we look at XRP was inverting and then it started to move down with Bitcoin's gravity. But we can see XRP is very, very strong at the moment. This is sending a very good signal to the crypto market that potentially the SEC case will turn against the SEC and for crypto. We absolutely require that to happen. When looking at ADA, it followed Bitcoin's gravity down, and of course Doge did too. This is the way of the crypto market. No alt can escape Bitcoin's gravity. They can temporarily move out of alignment, absolutely, but escaping is a completely different thing. There are always gains to be made, and when we look inside the crypto market in the past 24 hours, greatest gainers, Binary X, Aptos, Clayton, Carver, GUSD, which is a stable coin. What about Atom, Pax Gold, and DAI stablecoin? We're starting to see stable coins in the list of top gainers. That actually means the sell down was severe. The Someone You Know CTKS Partial Masterclass Scholarship is up for grabs. And you can only grab it if you're putting in a lot of hard work, dedication, and commitment. Positive excellence is the path to get an awarded scholarship. There is no other path. The CTKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method. I invented the CTKS method as a way to do technical analysis specifically for crypto that accounts for exponential implosions and explosions in price, but it also updates, as you see each and every day, normal stock market and forex technical analysis. We know because we're applying it to the SP 500, we're applying it to the euro, the DXY, we apply it to anything. Positive excellence is all about persistence and commitment. It's about gratitude, respect, learning, courage, kindness. This is a to-be list. That is, if you want to find happiness and meaning and sustainable success in life. A lot of people go for negative excellence. We see those people written up in headlines, generally on their way to prison. Negative excellence assumes that you can just become a rampant success by doing nothing. Or worse yet, by taking other people's success. That always backfires. Karma is real. We have the CTKS Creed because we know better habits create a better life. And your thinking just creates habits. So if you get better habits, you'll get better thinking. And a better mind creates better outcomes. And all results come from the mind. So the key in the CTKS Creed, these daily positive affirmations for abundance, financial success, and happiness. I am dedicated and committed. I win or learn and never blame. We've covered an absolutely huge amount of ground today. Kate and I want to thank you very much for watching. It's wonderful to share this time together. Have a great day or night ahead, my friends, and we look forward to catching up with you again tomorrow. Bye for now.